Morning, everyone. Welcome to our European office panel. We have the privilege to have with us today Mr. Briain Morris, Head of Europe at Slate office, and Mr. Stéphane Amin, Chairman at Inovalis REIT. Thanks to both of you for being with us today. Maybe the first question I'll ask Briain, could you give us a sense or expand a little bit on your decision-making process in terms of allocation when considering new markets? So in the case of Slate office, how did Ireland came along? And as everybody knows, you're already exposed to North America. So could you give us a bit more color on that?
Yeah, sure. Good afternoon or good morning, everyone. Briain Morris here, MD in Slate Asset Management. Forgive me, I'm doing this from my car in Ireland, so I'm touring some assets, so I hope everybody can hear me. So as you can probably tell from my accent, I'm originally Irish, but I spent over nearly 10 years of my life in Canada, and hence I'm involved with Slate and Slate Asset Management. Slate Asset Management have been investing in Europe since 2016. We've built offices here now in London, Frankfurt, Dublin, Oslo, and Luxembourg. And we use different pools of capital to execute on different strategies. As you rightly say, Slate Office REIT up until very recently was North American focused, but we've been tracking and mapping, every asset class, but with a particular focus on office in Europe, probably for the last 8 or 9 years. I'm based in Ireland, so obviously I'm very, very close to some, to the deals and the pipelines here. We just we happened to come across a super interesting opportunity, which is a business called Giraud Office REIT, which was a dual listed, internally managed business with very, very strong tenants, low rents in sort of just outside CBD locations, and very much mirrored in terms of the tenant profile, the quality of the cash flows, and the quality of the buildings, the portfolio that SOT had built to date. That business was trading a significant discount to NAV and presented an opportunity for Slate to get involved in a capital way. So we were lucky enough to spend time in that business, and we acquired that business just in March of this year. So super interested and we inherited the team. So obviously we've got boots on the ground. We acquired 23 assets, particular focus on office, but a lot of those tenants are international tenants across the island of Ireland. 50% of the buildings are in Dublin, which is Ireland's capital and very much a tech hub for Europe and maybe the world. So super excited to digest that team, and that team is now part of Slate Asset Management. So Ireland is one of the areas but we focus on in terms of geographies in Europe, but we constantly monitoring deals across the UK. We like the Nordics, and obviously we have a large team and presence in Germany also. But they're some of the markets that we map and track deals in.
Why did you pull the trigger on Ireland at this stage? In the context where Slate has a pan-European platform, like what was the catalyst, I guess?
Well, I suppose it was pricing. We really wanted to grow Slate. We wanted to grow Slate Office REIT, but really the pricing that we were able to achieve on this deal, the quality of the tenants. I mean, just to give you a flavour, there's a little bit of dislocation between Dublin and the rest of Ireland from a pricing perspective. Downtown Dublin now, your office properties are trading at 4 caps at about over €1,000 per square foot. And the rents are about 60 to 65 euros per square foot. We were able to buy our portfolio at kind of €20 rents, and we were able to buy that at over a 7 cap. So strong covenants, and with that, it's 98% occupied, low rents, really high quality tenants, institutional grade. And we just felt it was a really, really super interesting opportunity to get scale, but also get an on the ground team to help us grow our platform. So it was more opportunistic driven, but we've been looking for a long time.
Mm-hmm.
But if I think about our, sorry, I was just going to add, if I think about it, I was just going to add, Fred, if I think about our capital basis, we're a capital basis investor. We were able to buy this significantly below construction cost. Mm-hmm. So in today's kind of, high inflation rate environment with supply chain issues, these tenants paid 99 and 100% of their rent during COVID. So super resilient tenants. And it was opportunity driven as much as anything else.
Mm-hmm. And do I hear you well, Briain, that you are currently seeing other opportunities of that nature, you could grow your exposure to Ireland at this stage? Like, is that fair to say that Ireland is a focus market for you guys today?
Yeah, for sure. We think we can really grow our platform in Ireland. It's super interesting location. It has, I mean, if I think back to, Ireland 10 years ago, there wasn't that many international institutional investors. But in the last 10 years, it's really become a location that international investors has come into. So as a result, it's become extremely liquid and interesting from that perspective. And then Dublin and Ireland has benefited in no short way from Brexit. It is the only English-speaking country left in Europe. Obviously with a extremely talented workforce and educated workforce, part of the EU, euro-denominated currency. A huge number of strong credits and tenants are based in Ireland for that reason. So if you think about any of the large tech companies, they've made their European headquarters, they've made Ireland their European headquarters, whether it's Google, Facebook, LinkedIn, and as a result, you get all the feeder companies around that. So super interesting, super dynamic. And we really see a strong pipeline of deals that we can execute on here. So really excited about that.
Interesting. Stefan, you have a different expertise. Your expertise is in France and in Germany, and you decided to enter Spain. Could you give us a bit color on your decision-making process in regards to Spain?
Okay, just to understand our process, a little bit of background on our company. So today we are based in France, Germany, Spain. We have about 350 people on the ground. And we manage about $10 billion of assets. The DNA of our company, regardless the size of our portfolio and our team, the DNA of our company is more a development, opportunistic, refurbishment, trading team. So when we select a market, we try just to make sure that we enter at a good time in terms of cycle of real estate. If you remember when we IPO Inovalis REIT, our really main message was to say, guys, Europe is going out very soon from a major real estate crisis. Whatever we buy in core markets, and the two biggest markets in Europe are France and Germany. So whatever we buy in those markets, without even working out the properties, without even paying too much attention to our repositioning options, we should make money by just following the way. Then comes on the table the DNA of Inovalis, which is how can we select assets that will be at the end of a lease. In fact, to tell you frankly, we buy assets who has to be let with very good cash flows. But the more the tenants are prime, the more you overpay the asset. The question is better to think about, okay, let's buy a good asset, very well rented, but let's try to foresee this asset in the next turn of his life when the tenants will leave. Is it a good opportunity? Is it a good jump up? And if you go in Europe today and you are involved in your local markets, we have 12 offices in Paris, 3 offices in Germany, 2 in Spain. When you are well located in your markets, then you can find out sometimes analysis a little bit more locally the best location opportunity when it comes to think about what will happen when our tenants will leave. So you have the location, and then you will have the team to develop the strategy of repositioning you will have to put on the table. So when you choose a country, and the location, that is our trend. So first we choose France and Germany, easy to go. We were just out of a crisis, the deepest market in Europe. We bought a portfolio at 8% cap rate. Probably it went down to 5, just to play the market. Then among those assets, you have experienced that with us over the last 6 years. Each time we had a tenant leaving, we turned the property as a very opportunistic and good value-added asset. And we have been even able to sold properties empty higher to NAV, as you have experienced with us over the last few years. Starting now to Spain, we're starting back to Spain because Inovalis has worked in Spain about 10 years ago. We were more in development then, in trading assets, and we were just waiting the good time to re-enter in Spain. And 2 years ago, for us, has been the good time. We have seen over the last 2 years a little increase in cap rate, and knowing that the Spanish market was already on delay versus France and Germany. So it was for us the best time to start.
Mm-hmm. Okay.
Same strategy in France and Germany.
Okay. And then is it fair to say, Stefan, that you continue to see opportunities to grow in Spain, or you have other markets in mind?
Well, we are seeing opportunities, of course, in Spain. We're growing in Spain. We just, as you have seen in the REIT bought our first property, we have the intention to buy more in Spain, of course, according to our equity disponibility, cash, our cash, excess cash, equity cash. On the other end, as a fund manager of our funds, we have already bought 9 properties in Spain over the last 2 years.
Mm-hmm, mm-hmm. Got it.
What we see there, it's cap rate. We still have cap rate higher than France and Germany, but above all, we have rents that didn't really move up following the crisis. Just when the market started to pick up a little bit in terms of rents value, the COVID slowed it down kind.
Got it. Briain.
And of course, we are studying other markets like Italy.
Got it. Briain.
Markets where we always have been studying there.
Yep, got it. Back to you, Briain. How do you feel about so far in 2022 on the required rates of return across Europe? Do you feel like there's been any changes from I guess from a capital market standpoint? Do you feel like investors in general will should ask for a higher required rate of return, or on the contrary, you still see a healthy fund flow?
This is an obvious answer, but it really depends, Fred. So, I mean, at Slate, we cover all the different risk return profiles. So, we're a value add investor, we're a core plus investor, and then obviously we're a REIT investor. I think it depends. I mean, I think, generally from a high level, what you're seeing is there's not as much value add opportunistic type funds out there chasing deals, I would suggest, in Europe, and there's more of a core plus. I think there's more of a glut of core plus participants, and I just think that comes down to just pricing is such that I think during the pandemic, for example, we own a lot of grocery stores in our strategy, in our grocery strategy, in our essential strategy in Europe. The pricing for that during the pandemic has seriously tightened. There's a huge demand for that, right? If you think of London and office, huge demand. You can see massive demand for that. It's been pretty much bulletproof and unaffected by the pandemic. But no, I think you got to pick your spots, and I think it really, really depends. Obviously, there's an announcement last week about the ECB about potentially raising the interest rates by 25 bips and further. Inflation is obviously present, and we're seeing that. So it really, really just depends. It depends on asset class. It depends on tenants. But people say Europe and North America, which I always find funny. Every little geography is different. So what Stefan might be seeing in Spain is different to what I'm seeing in the south of Ireland, is different to what we're seeing in London. And leases and the rule of law is different in each of these geographies, right? Lease term is different. What standard is different? And then, and then are you able to protect yourself within those leases in terms of inflation? Are they inflation linked? Are they upward? Some of them are upward only on review, and some of them just go to open market. So every geography is different, and every asset class is different. But I would suggest that banks on the debt side, banks have got pickier in terms of the participants and the strategies that they're willing to follow, particularly in a rising interest rate environment that we're seeing at the moment. So that obviously impacts returns. But I would just generally say it depends. But it's getting harder and harder. I would say to make the numbers work. At Slate, we have a particular focus on capital value rather than just chasing yield. So we really think about where are rents that we're buying, and where do we think they're going, where do we think they're going in terms of the competitive to the competitive landscape. And we really just think about at what capital basis are we buying this, particularly when we're buying office. Are we buying it at or below replacement cost? Typically we are, which gives us great, we can be very, very defensive and I suppose competitive with our rents then if we're buying assets at or below replacement cost. So I mean that's why we having a strong team in Europe that's constantly focusing on uncovering off-market deals is really part of the privilege that it is to work at Slate, because you've got to look at a lot of deals before you find value, I'd suggest. So a long-winded answer, but that's what I think.
No, it's totally fair. And so just getting back to capital flows today, just to be sure I understand here, have you started seeing changes in capital flows, or what would be your scenario for the rest of 2022 and next year in that regard? Like, do you feel how would you characterize the appetite for Ireland today?
Yeah, so I think it's a tale of two cities almost. So I would suggest that it's Dublin and the rest. So Dublin has become a real hub in terms of pricing, and it's a flight to quality, and you'll get this anytime globally in times of any type of uncertainty. There'll be a flight to core and a flight to quality. So I mean, Brookfield, our Canadian friends, just purchased Hibernia REIT, which is a publicly traded office REIT with a focus on downtown Dublin. They paid well over, I think it was 1,200 euros per square foot in around a 4% cap rate. Quality buildings, good assets, but they're buying 60 euro rents. So I think it's more, there'll always be a serious demand for that type of product. And you'll see the same in London. So I mean, you look at we speak to the agents there every day, and you can see the cap rates in London being paid, say, even in office, they're in around 4%. I think when you get into if you take Germany, again, the big cities in Germany, same thing, but it's when you get out into maybe more the secondary cities that you can start to see that sort of widen in terms of pricing. But really we focus on rents, as I said, on capital basis. And we're not necessarily a trophy buyer, but we're looking for quality office that mightn't necessarily be described as trophy, but where we can still get a really, really strong cash flow from a very, very, very strong tenant. That's really our focus.
And do I understand you well that through the Slate platform, you are able to generate off-market opportunities? Is that what you're saying?
Yeah, absolutely. I mean, we would, I don't know what the percentage is, but everything in Europe, by the way, is described as off-market. But yeah, look, we speak to a lot of participants in the marketplace every day, whether they be owners, fund managers, REITs, banks, people who might be having some sort of distress. So we like to kind of cover all our bases. Obviously, we speak to our agents and we speak to agents as well. But we like to make approaches and understand the market. So we spend time with all the participants. So as a result, then we're able to do off-market deals. I mean, this year alone, we've done, this deal, for example, this deal in Ireland was off-market. There was no particular advisors involved in terms of doing the deal. If I think about our German strategy, our Norwegian strategy, all of that stuff was done off-market. But yeah, so you'll find that generally most of the brokers in Europe, when they come with larger portfolios, Fred, they are very much core. They're very much core type product, and they go to the usual suspects. Yeah, we generally will feature in terms of receiving emails, but that's not necessarily the returns that we're trying to generate. We're core plus and above that, right?
Got it. Stefan, back to you on Spain. What are you seeing so far in 2022 in terms of financing conditions and also capital flows?
Okay, in terms of financial condition, Spain is a little bit more expensive than France and Germany. We have a kind of 0.5, 0.8 difference in terms of interest. But on the other hand, that is the same gap that we find in the cap rates. The question will be more, what could be the opportunity of increasing value? I agree with Brian when he said that at the end of the day, we have to be more focused on what could be the tenancy, the rents later on. I will add one more criteria, as I mentioned earlier. We have also to think about what could be the use of the properties getting vacant. To that extent, the Spanish market is quite close and similar to the French market. Each city is quite mixed in terms of office, resi, hotel. I mean, in terms of category of assets. So, like in France, we could imagine that some days when the property is getting vacant, we can turn it into a resi when it's office to resi. So I will be more focused on what could be the real estate tomorrow if we have to reposition it, instead of just focusing on its cap rate and interest. But as I said, Spain is offering the same opportunity than France, as long as you have the teams to understand that and to execute the business plan. Then we can really bet on quite nice capital gain expectations.
And while I got your attention, Stéphane, looking at Inovalis SA, being your manager, you know, what are the different challenges you're facing today when comparing, or what would be the main differences when comparing asset management and property management in Spain compared to France and Germany?
I would say that the management duties and environment that we find in Spain is quite similar to the one we have in France.
Okay.
At the beginning, we were quite, it was not easy to find a good property management that was able to deliver regularly on time the package that we were supposed to get. But when it comes to deliver duties on the ground, I'm not talking about the reporting now, I'm just talking about dealing with tenants, dealing with brokers, dealing with refurbishment aspects. We are quite similar to what we have in France. Fortunately, we had in our team 3 Spanish, where for 15 years going and coming between France, Spain, and Portugal, those 3 markets. So we have been able to, from the first assets, experience quite efficient process in terms of follow-up of tenants. We have 2 assets that have been redeveloped already in Spain. So, I mean, and to come to the conclusion that we are really in the same kind of way of work than what we have in France. Very different to the German aspect on that side. Very different to the German way of working on the other end, but quite close to France.
Got it. Briain, back to you. Have you heard of any challenges, or how would you compare asset management and property management in North America to Ireland in that regard?
Yeah, it's a good question. So I suppose at Slate we outsource our property management capabilities, but all asset management is done by Slate employees. So
yep.
we to the best we can, we try and standardize that that training from a Slate perspective. So any of our asset managers in Germany, Norway, London, or Ireland are generally centrally trained, right? So irrespective if they're Irish, Norwegian, German, Swiss, doesn't matter. They're centrally trained by our folks in Toronto. So all of that asset management is done in-house. But obviously, you know, between there are always, you know, country-specific issues in the asset management space, but really it's about being on the ground, knowing the folks and how to get things done. So we're lucky enough that we've a smart team who are highly engaged, and we have built exceptional relationships directly with our tenants across all of our strategies. So, and we work with them and speak with them all the time. And as it pertains to office, that's got super interesting because tenants now we're finding obviously they're looking for high quality, well located. But more and more, they're looking for more amenitized buildings and more reasons to come back to the office, obviously, which we believe in. And in Ireland, we've been lucky enough for the last 11 months where that it's been fully open, and we've seen a huge return. We've seen a huge return to the office, and that's probably because the same reason that we're in the office is, you know, to create a culture, to collaborate, to be innovative, and ultimately productivity. So we're seeing that across our portfolio. But yeah, I think it's just really about building, irrespective, it's about building directly quality relationships directly with your tenants, irrespective of location. And Slate are a firm believer of doing that.
Yeah, that makes total sense, of course. And last question, we got 4 minutes here. I want to be sure I ask Stéphane, how would you characterize your experience as a public company, being exposed to foreign countries?
Alors, public company, on this extent, as I believe those days, every public company, we don't believe that the market is rewarding us for all the work we are delivering. What I think that on the time being, I believe that the Canadian community should more and more recognize our track record and our ability to distribute and increase values our assets and distribute from the assets, from the rents to their ownership. Now the question then, when can it be happening? I mean, you have seen our unit price. We are quite most of the time below our NAV. But I think that at the end of the day, being stable, distributing, showing that we make capital gain, we probably get a reward someday.
Got it. Briain, what kind of feedback do you get from investors now that Slate Office is invested in Ireland, outside North America?
Yeah, I think for the most part they're excited, and I think it just speaks to the breadth of our platform that we have been in Europe a decent amount of time now. We've a large team and a growing team here. Slate was originally founded by two brothers, as you're aware, and Brady Welsh, the older of the two, has relocated himself and his family to London probably 3 years ago. So the fact that we've got senior folks on the ground here and we're hiring senior folks in Europe, I think speaks to the fact that we really want to grow our European platform overall, and that very much includes SOT. So we see the Ugrove transaction in Ireland as really just a starting point. We know we can grow it in Ireland, but there are other geographies, particularly the UK and particularly Germany, where we think we can grow. So I think we're super excited to just grow the platform of SOT. Keep focusing obviously on what we do in Canada and the States, but also to garner some breadth into Europe as well, into those markets in particular.
Got it. Well, that's the end of our panel. So Stéphane and Briain, thank you so much for your time today, especially you're a different time zone. And for everybody else, please stick around for the next 5 minutes. We'll start our industrial panel soon. So thanks again.
Thank you very much.
Thank you very much.
Bye. Thank you. Bye, Stéphane.